Gold futures slipping Thursday, but the spot price holding up. Now, John, what does this divergence tell you?
Let's see how spot develops vis-a-vis futures, but at the moment I think it's basically a struggle, specifically because of the background conditions that should have a much higher.
And before we get to Europe, I just want to add, is it possible, though, that higher spot prices mean there is some physical safe haven demand, but that the futures market is still trying to unwind all the MF global trades and perhaps the need for liquidation based on Wednesday's disastrous Dow sell-off?
Right. I mean, I wouldn't shut this possibility out from the realm of real, actual underlying trends in this market. But to the extent that physical should be serving as a safe haven here at this juncture, it is still a fairly lackluster type of volume. First of all, I think we have to focus on how much need for liquidity and how much in terms of margin call potential comes into this market, because investors right now are skittish on anything but sitting on a pile of cash.
Skittish for sure, John, but I want to turn our attention to Europe. I've been talking to a lot of experts who are convinced that the European Central Bank will have to be the lender of last resort, will have to print more money to literally save the Eurozone, and that will be hugely positive for gold. What do you think about that scenario?
Yeah, I've seen that bandwagon too, and everyone was very quick to jump on it and say that, they have absolutely no choice but to fire up the printing presses. I think this is going to be proven wrong. You've heard from Jürgen Stark, none other than Jürgen Stark, saying that, look, we can't afford for this institution to lose its independent status. At that point, we might as well reconsider the whole concept of what the size of the union would be, who makes it up, what currency it adopts, and so on. I don't think they're going there, albeit.
But do you think at some point they'll have to change their stance? Because as you said, Italy borrowing costs are soaring despite ECB short-term buying. So at some point, that's just not enough to support the Eurozone market at all.
At the end of the day, I think they might just do the unthinkable and let one or two institutions or instruments or perhaps entities basically roll over and, croak.
So if that happens and they wind up shedding some of the weaker countries here, what does that mean for gold? Does that mean mass liquidation for cash, or does that mean massive safe haven buying?
Well, it could initially mean liquidations, because if the crisis aggravates anymore, and it's already, like I said, at its most intense phase, people will run for the exit doors in everything. Now, if things really unravel, certainly there could be a nod towards the safe haven attribute that gold seems to have sort of shed a little bit because of the influence of hedge funds. But I'm not sure that's enough to make for $2,000 gold.
All right, fair enough. So then what's your short-term and medium-term range for gold prices then? What's the range you're looking at?
I think at this moment in time, we're basically stuck in this range of 1680 to about 1780. And medium term, if in fact things continue along these lines, we could reignite the sort of bearish trend that would bring us down to at least the 1480 and possibly the 1300s or so.
All right, thanks, John. I really appreciate it. So a really murky, confusing outlook for gold prices in the short term. Thanks so much.